What's up, everyone? In this video, we're going to be doing the weekly recap of the stat modeling strategy. The market has been insane over the past couple weeks. There's been a ton of volatility and a ton of selling pressure across the board, whether we're looking at the market overall, like the S&P 500, or we're looking at growth companies, or even if we're looking at cryptocurrencies. It has been brutal. I mean, even Bitcoin, the powerhouse, is selling off in a major way. So it's been a wild ride, to say the least. But let's get right into this recap. So starting off with the swing plays, we have a lot of plays like we've had for like the past couple weeks. A decent amount of them are to the upside. We have some plays that are uncorrelated to the market. We have some plays to the downside, and we even have a couple plays for like rising rates. HYG puts, and then the previously held JNK puts and LQD puts. Basically, when rates rise, for the most part, these fall, which is why we have puts on them. The good thing about these setups is that if we look at basically any other stock in the market, like let's say we looked at Peloton as a perfect example. The stock is down a lot, right? And the problem is that implied volatility is extremely high right now. It's at like 150%, and a couple months ago it was at 56%. So it's very high, to say the least. And basically what this means is that options are overpriced on Peloton right now. With HYG and LQD, implied volatility is still, it's just average, you know? So the options are still priced in a big way with this one. And if we zoom out, or priced in a good way with these ones, and if we zoom out to like a longer term chart, we can see like every now and then it has like some huge drops. Like if we look in, I guess you could say like 2013, LQD had a huge drop, and you know, every now and then it has like some really big moves. So if we do see one of those big moves, one, implied volatility will pop up and the puts will go in the money, and that will be a good setup. But it's just kind of like I guess you could say these plays are like kind of like hedges for rising rates. So either way, I mean, they're looking pretty good, and we got them at a pretty good price. So we're looking forward to those ones. Obviously, we want the market to pop up, considering all of the massive selling pressure we've been seeing over the past couple weeks. So the main thing that we're hoping for is a pop back up. If and when we do see a pop back up, that will be like the ultimate opportunity for, you know, swing plays, because there's so many stocks to choose from at great levels. So that will be great. And let's get right into the bot plays from this week. So we did have a short trading week. There were only 4 trading days in the market this week. The play on Tuesday was a dud. It only popped for 3.4%, so that one sucked. The play on Wednesday was really awesome. That one popped for 73.58%, so that was a great play there. The DraftKings play on Thursday, it wasn't good, but it wasn't horrible. It popped for like 13.5%. I've noticed over the past maybe 2 to 2.5 weeks, it's all been about like taking profits quicker than normal, because the market, as we know, has been extremely volatile. So like if we look at the SPY intraday over the past 5 days, like we'll have it running up in a very strong way to the upside, and then literally an hour later it's crashing down. So like even on Friday alone, like it had a pretty nice fall at open, rocketed back up, and then just tanked lower. So it's all about been taking profits quicker than normal lately. And I guess you could say the same thing with VIX. Like it popped up for a little bit, but you know, then the market turned right back around. So it was an all right week. I definitely wouldn't call it great, but Zoom was pretty awesome. That play kind of carried the rest of the week. You know, a 73.5% pop is definitely pretty awesome. And really, it's just, we're in a really tough market right now, whether it's for swing trades or even day trades, because like I know it's been selling off a lot lately, but when you look at the intraday, I guess you can say, activity, we actually see a decent amount of upwards movement, you know? So it's not as simple. It's just buying puts and just making 300% a week, you know what I mean? So it's been a pretty volatile past couple of weeks, to say the least. And then shifting over into the theta plays, it's been pretty golden as usual. The only thing, we did have a loss with Peloton, but besides that, I mean, it's been pretty awesome. Peloton stock got destroyed this week on bad news related to their production and things like that. But worst case scenario, if we do want to play this one again, we can easily short some more puts because implied volatility is sky high. The stock right now is at like 27, so like you can sell the, I guess you could say like the 20 strike put and get paid like $74 for that. So that's, or no, you can sell a 20 strike put and get paid $117 for that. So that's pretty huge. That's a really awesome return on investment. But then again, it is a little risky right now. So with everything being said, thank you guys so much for watching this video. Hopefully the market has a better week, and have an amazing weekend.